Mr. Bradshaw at AddSomeToYourIncome.com here to answer the question, what percentage of income should go to rent? Now, first, I'm going to talk about reasons to rent. Then I'm going to go into some things to keep in mind when you are renting, followed by a little bit of definition of gross versus net income to be able to do a quick calculation of the percentage that you're looking for. And then I will give my suggested percentage amount that should go towards rent. So let's dive in. What are reasons to rent? So you're looking at renting, and there are a lot of reasons why to do that. One of the most valuable reasons for renting is that you can build up credit towards being ready to own a home. By paying rent, you begin a track record. You begin to prove that you're one that can make payments. It goes into your credit score. It becomes something that tells the financial system that you are someone who can make payments. This is important if you have poor credit. You need to be able to see and think of your rent payment as something that's proving to the system that you'll be able to do a mortgage. And it might take some time, a couple years, to really make some change in your credit score if that's your purpose for renting. A lot of other reasons why you could be renting. You might be in transition, say you are moving from one place to another, you've got temporary work somewhere, you've gone through a separation or divorce. There's a lot of things that could be happening in your life where you're in transition, and that's a nice time to rent instead of to actually purchase a home. Your market might be such that renting it just works better, and there are times for that in the market where buying seems to be it's a seller's market. Okay, so you're not being able to really buy, but you might find places that you can rent, and you basically get the bang for your buck you want for the location you want. And hey, it could be that you just need to be close to mom for a while, right? So you got your reasons for rent, and be smart about them, especially if it's to build credit and have the perspective it could take some time. Here are some things I'd like you to keep in mind while you are renting. Number one is consumer debt. It's often the fact that people go into a rental situation because they want to save up money. All right, I should be back in my other slide here. A reason to rent is able to save up money for a down payment, for school, whatever it is you're saving up for. A thing to keep in mind, though, is that often because you're renting and it's that price that you're paying and you have all this chunk of change, is that you think you can just spend, and you'll spend more and you'll end up in consumer debt. So be aware and be careful about that, where you are making sure you're increasing your income instead of increasing your expenses. A reminder as well, as you go into renting, some people forget that there is that down payment. Sometimes it's the full month payment that's needed as a down payment. That money is usually returned to you once once you leave the rental and it's in nice condition, right? So this is money you put up today and then you get it later. It's almost a forced savings, really. But do keep that in mind as you're thinking about where you're at with starting the renting and that first bit. A little just tidbit, because I've been involved in real estate where there are renters, to communicate. If something gets broken, communicate it right away, so that you don't end up with a long laundry list of things that need to be fixed when you're finally having that conversation with the landlord. They'd rather fix it along the way, and they will usually take responsibility for the property because it's their property, and they understand and they're prepared to take care of things. So communicate. Also, when you're making your payment, there are late fees. If you are late on your payment, there are late fees, and depending on how that's being reported, it can affect your credit. So make sure you're paying on time. However, not early. I was collecting rents at one point for years. I've collected rents, and at one point I had these people that would pay quite a few days early, and it always kind of felt like, okay, this is really early, because I feel like, knowing how money works, that I would need to pay them interest on that early payment. It's just not usually done anyway. You probably weren't even thinking about that. But do be aware that late fees are late fees, and it's that day. You can't be like, the next it's usually 5 days, and you can't be like on the sixth day, like here it is, 6 a.m. on the sixth day, so it's before the bank's open, so I'm on time, right? You're not on time. And be sure to communicate if you think you're going to be really close to the 5 p.m. on the fifth day for your payment, to just make sure that they will still not charge you if it's at 5:01 p.m. because those late fees exist, and it's often business hours of the fifth day. All right, enough about things to keep in mind. Let's start looking at the amount of income, definitions of net and gross income. Here we go. Income. Income's the money. There are 3 types of income. You have labor income, which is where you work today, you get paid today. Passive income, you're working today, you get paid at harvest. Hard to like base your rent on this. Usually they only look at your labor income. And gift income. Someone else worked yesterday. Hey, maybe there's someone who's willing to do your down payment on your rental. If that, you're moving close to mom, she might help with that. Negotiate that, because it's basically money that gets put there, sits there forever, and then goes back. Nice to have even a small agreement like that with your mom in writing, so that later everyone remembers the black and white ink. Your income is divided between net and gross. So just a quick, easy way to remember it. Net, it's like a fish net that goes through the water, and there are things that go through the holes, and then there are a lot bigger things that end up at the end. And when you're all done doing that, you have less in the net than was actually in the ocean, right? As opposed to gross, which is the larger amount, the bigger amount, all of it. It's grand, right? It's the big amount is the gross amount. So net is when you take gross and you take out all that money, the taxes, the insurance, and these expenses that come out. Net is what you actually see on your pay stub. So now to our question and the calculation. Where should we be when it comes to how much we put in to rent? I will first say your gut will probably guide you. You probably already kind of had a rough idea of how much would hurt too much, how much would seem like this is going to be if I only pay this amount, I'm going to be in a really poor neighborhood, a place of poverty, a rundown spot that's going to just be gross, and it's going to need lots of upkeep and maintaining. However, as promised, I will go through a fast calculation and my recommended amount that you would have for rental. And that's 20% of your net income. Right, so I'm just going to do a quick call back to what I just defined with net and gross. Your net income is that amount on your pay stub. Not your gross amount that you're paid, but your net. And it's not divide by 4. I needed to fix that. It's divide by 5 when it's the 20%. I could just pick up my device and say, hey Siri, what is 20% of? But if you're actually going to type it into the calculator, you're not going to divide by 4. That is a typo. It is divide by 5. Just go with me on this. It's the divide by 4 was for the other video I have about calculating your mortgage, which hopefully in the near future you're able to find yourself calculating for that no mortgage because you've saved up enough. Anyway, divide by 5 is 20%. I know how to do math. It's just a little typo there. So if you're going to enter it in the calculator, you type in the actual amount. So let's say your monthly net income is $4,000. You type in 4,000 and you'd multiply that by the 0.2, the 20%. And that would give you, in this case, $800. Those are just rough numbers. Obviously, if you're more like a teacher and you're bringing home $2,000, then you're going to look at a rent for about $400. This is a lower end of the number because I'm on the assumption that one of your reasons for renting is to be able to save up that money for your next step, or that you're just in transition. Obviously, if you found something that was about $1,000 and real decent, you'd probably go for that, even though it's the 25% range. If you're up at mortgage amounts of like 43% of your income, you might as well be looking at getting a mortgage, and really even once you're up by 30% of your income, that's usually what mortgages are. that is my advice on the amount. You, of course, as I said, probably know in your gut how much you're looking at, and then you can go looking for those properties that are within your price range. And I look forward to seeing you on the other side.